Hi everyone. In this video we will talk about is Bitcoin the best investment for Millennium. So before starting this video, please like it and subscribe to our channel for the future updates. Let's begin. The concept of people sending digital currencies like Bitcoin over the internet isn't all that complicated. After all, transferring money from one online bank account to another is exactly that. Cryptocurrencies accomplish this by utilizing blockchain technology, which is a method of transmitting data over the internet. However, unlike traditional currencies such as the US dollar and the British pound, cryptocurrencies are decentralized, meaning they are not regulated by a financial authority such as the government or central banks. This has some advantages. Cryptocurrencies are global, which means that their value is the same in every country. This feature makes it much easier to send money from one person to another around the world without having to worry about exchange rates. But the question arises, is Bitcoin the best investment for Millennium? It's all about balancing risk and reward in smart investing. When weighing the benefits and drawbacks of a potential investment, financial professionals usually consider the following. What has been the performance of the investment over time? What are the current trends in the market? Do the company's valuations appear to be reasonable? Bitcoin has had unique and pronounced risks as an investment until recently, but that is changing thanks to new rules and regulations that have prompted institutional adoption. The world's most valuable cryptocurrency has experienced extreme volatility throughout its 12-year history, with prices fluctuating by as much as 10% on any given day, reaching an all-time high of more than $41,000 earlier this month. Apart from wild price swings, Bitcoin has structural issues that most asset classes do not have to deal with, such as lost or stolen password keys, which can wipe out an investor's entire investment. In February 2011, the price of Bitcoin was $1. After 10 years, BTC is now worth $51,000. You would now have $5,100,000 if you had spent $100 to buy Bitcoins back then. This could be one of the best investments of the 21st century, with returns unattainable by the stock market or other assets. Most people think about the lost profit and regret that the train left after such an unexpected takeoff. Professional financial market participants, on the other hand, may hold a different viewpoint. For example, Ari Paul, the CIO and co-founder of Blocktower Capital, believes that BTC has the potential to generate a profit of more than 10 times in the next 2 years. He believes the current bull market will last until the end of 2022, and that Bitcoin will be able to strengthen between $100,000 and $400,000 by that time. Tesla appears to believe in Bitcoin's six-figure price, as evidenced by the company's recent announcement that it has invested $1.5 billion in the cryptocurrency. It's also getting ready to sell BTC-based electric vehicles. Visa appears to be bullish on Bitcoin's prospects. The payment system is working on an API that will enable banks to offer services to retail customers for buying and selling cryptocurrencies. By the end of 2021, the project should be completed. Isn't it incredible? But who could have predicted a 51-fold increase in the price of the most popular cryptocurrency 10 years ago? Fortunately, due to Bitcoin's rapid growth, government and institutions have stepped in to address many of the risks associated with the digital currency, with the U.S. Office of Comptroller of Currency authorizing banks and custodians to provide cryptocurrency services, which eliminates these issues. In short, Bitcoin has matured, despite the fact that it is still in its early stages of adoption, and now has significant long-term value. Since the start of COVID-19, the federal government has spent nearly $4.5 trillion on direct payments to individuals, increased unemployment benefits, small business loans, and other types of financial assistance, with more on the way, according to President Biden's proposed $1.9 trillion relief package. While deficit spending is necessary for the economy's long-term health, it also raises the risk of inflation. The national debt has increased by $7.6 trillion to $27 trillion in just 4 years. To protect themselves from such volatility, many investors are flocking to Bitcoin, which is immune to inflation by its very nature. Due to a stipulation in its source code, there can only ever be 21 million Bitcoins in circulation. As a result, Bitcoin is a limited, and in-demand, asset, according to supply and demand. At the same time, improved regulations, infrastructure, and access to financial institutions that hold investors' money, such as Fidelity, have made Bitcoin investments as safe as owning bonds and commodities like gold, which are also used to balance portfolios. When gold rallied from 2001 to 2011, it was largely due to the Fed lowering its funds rate targets, signaling the end of a period of tight monetary policy. When inflation fears faded and the stock market soared in 2012, gold's value plummeted. Then you might wonder, if Bitcoin is volatile, how can it also protect itself from volatility? Despite the fact that Bitcoin's price has fluctuated dramatically over the years, much of it can be attributed to the asset class's newness and lack of regulation. That's changing now, thanks to newly enacted regulations and the influx of large players such as macro funds, large hedge funds, and life insurance companies, all of whom are attracted to the more stable environment. While price fluctuations are unavoidable, we see Bitcoin as a long-term investment opportunity that will only increase in value over time. Investors may be concerned that they've missed the boat now that major institutions are bullish on Bitcoin. History, on the other hand, shows that this is not the case. Amazon is one of the world's most valuable companies. The stock's high price was more than double its open price on average in each of Amazon's first 12 years. Investing in Amazon, on the other hand, has been extremely profitable for the past 12 years. When it comes to investing in a new asset class, there is always an inflection point, a point at which the infrastructure is in place to allow for widespread adoption while still leaving room for growth. With Bitcoin, we believe we've arrived at that point. The sheer size of Bitcoin's market capitalization, more than $600 billion, is the most powerful indicator of its worth. If we look at it through the lens of the S&P 500, Bitcoin would be a top 10 company in the world, having grown from $0 to $500 billion in just 12 years. Only a few companies have grown so quickly, such as Facebook and Tesla. It's natural to want to invest in something tangible, such as gold, when the world is spinning out of control. Bitcoin, on the other hand, is valuable because of its intangibility, not because of it. There's always the option of mining for more gold. Bitcoin is unique among assets in that it is the world's first store of value whose supply is unaffected by rising demand. So, how do we proceed from here? Bitcoin could reach $318,000 by the end of next year, according to a Citibank analyst, who compares the cryptocurrency's meteoric rise to the gold market in the 1970s. In the early 1970s, an ounce of gold was worth around $35, compared to a little more than $1,900 today. As Paul Tudor Jones pointed out, part of gold's appeal is its value as an inflation hedge. Is gold, on the other hand, behaving in this manner? According to Campbell Harvey, a Duke professor and senior advisor to research affiliates, the real story is more complicated. Gold has the potential to retain its value over hundreds of years. However, it is extremely volatile and unpredictable over short periods of time. Regardless, gold serves as a security blanket for investors who are concerned about the state of the world. For example, gold's most recent heyday occurred between 2011 and 2012, when the United States was stumbling through its post-Great Recession recovery and the Eurozone was on the verge of currency disaster. Gold, on the other hand, has been a dead weight for much of the last 8 years as stocks have soared. Institutional investors appear to be hoping to get in on the ground floor of the new gold, so to speak. Bitcoin's current rollercoaster ride may reflect stock traders' bullish, risk-on tendencies, but it could eventually supplant gold as a safe haven asset. According to McKeon, the Bitcoin network currently holds $350 billion. Gold, on the other hand, is worth several trillion dollars. As a result, Bitcoin is still a minor currency. The network will store significantly more value as the narrative surrounding Bitcoin as digital gold gains attraction and acceptance. Because supply growth is capped at around 2% per year, and supply increases will continue to decline over time, this translates to a higher price for Bitcoin. As a result, Bitcoin has a lot more room for growth than gold, and it will continue to attract big money looking for high returns in a low-yielding environment. We hope you enjoyed the video. If you want more videos like this, let us know in the comment section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.